Hello, everybody. Welcome to another episode of Epic Phelan. We have Mike Havery here from Mortgage Architects. He is a mortgage broker. I have him here on the show today, especially because of what we have going on in the real estate industry here. I'm a realtor as well, other than just doing this show. It's very important to get some information out to people about mortgages, not only in the process of buying a house, but if you have a mortgage, an existing mortgage already, some important information. So it'll be nice to pick Mike's brain here. Because Mike, say hello to everybody.
Hey, everybody. Mike Havery, Mortgage Architects, themortgagearchitect.ca. I'm thrilled to be here with Ryan today.
Right on. So Mike, how long have you been in the business for?
I'm in my 15th year now.
Right on. So you've seen all sorts of things now. You've seen world financial crisis back in the 08 and everything else in between, and now even a pandemic.
The year I started, we had 0 down 40-year amortizations. And the only constant in our industry I can say from then on has been change. And I've seen all kinds of crises, all kinds of rate spikes, rate drops, changes in qualifications. The key for us is to be as educated as possible and to convey what's out there to our clients in a manner that they can easily understand and help them make great choices.
Absolutely. So naturally, from when this first started, there's a bit of a lag here, and really only about, I would say, 2 weeks ago, around the middle of March is when we first noticed a lot of people getting a lot more serious about this. Or beginning of March to the middle of March is when people started getting a little more serious about Corona and COVID-19. Are people slowing down on trying to get approved on mortgages, or what are you seeing?
Well, first of all, I'd like to go into really what people are concerned about now. And I'm seeing the banks inundated with requests to defer payments or just inquiries about deferring payments. That's the crux of what people really want to know now is, what can I do with my mortgage? Because there's an awful lot of anxiety out there. And I really see the role of the broker or the advisor to help the client navigate that water. Where do I go to get the information on my lender? How can I apply for a deferral of payment? Because most people right now, Ryan, there's an awful lot of anxiety. If one of them hasn't been laid off, there's a good chance they are, or they see themselves being laid off. And in fact, most people are 1 or 2 paychecks away from not being able to meet their bills.
That's what they say the stat is that most people, Canada and the States, are basically a paycheck away from being broke. So this is definitely a very serious time. I'm not about fear mongering or anything, so I don't want to use the word scary or say it's scary time, but definitely it's a time to talk to your professionals for sure.
If I can expand on that, most people got into the mortgage brokerage business to help people because they care. And really, that's why I got in this business, is to make a difference in the lives of those I deal with. And I looked around at careers and I thought 19 out of 20 people I deal with are going to do better with a broker. And I'm going to get paid for what I do. And it doesn't matter where it goes. I'm going to basically get paid the same for every lender. But the difference is I work for you. I don't work for any of the banks. So I'm going to give you choice, selection. Our mortgage brokerage is the largest in the country. We do more mortgages than any of the big banks. So we have the buying power. So one of the things I do now is really use our combined resources as a company to identify how best to contact the lenders right now. And depending on the lender, there's options available for people at this time. So they might look for deferral of payments, reamortization of the loan. So maybe they go from 20 years to 25 years. They can capitalize outstanding interest and cost, and they can make special payment arrangements. This started as a program with the insurers. And at the outset, I think there was a lot of uncertainty amongst the big banks and amongst a lot of lenders how the program was going to roll out to help people. And what I think you'll find now is that banks have dedicated websites to it to contact them, dedicated phone numbers, dedicated teams. But the bottom line is people have to understand and be patient. Most are committing to getting back to them within 5 days.
Oh, wow.
To give you an example, a week ago Friday, TD had 43,000 emails about taking advantage of the deferred payment option.
That's madness.
CIBC is receiving 20,000 applications a day. This is new. They were not set up with departments to handle the amount of business they're getting. That being said, some lenders may still treat it as a case-by-case basis. It doesn't mean it's automatically going for deferral. In my humble opinion, I believe the question will arise, should I defer or not defer? I think the best response to that is if you feel you should defer a payment, you should make the inquiry. You should ask. A lot of people say, well, I'm employed today, but I don't think I'll be employed next week. If there's a lot of anxiety there, ask for it. That's my own opinion. And the mindset at the outset was, unless something's materially changed, you shouldn't ask. Well, there's lenders I've seen on every side of the spectrum. Some will automatically do it. Some will do it month by month and make you reapply. But the key is establish a link contact if you can online with that lender. And I've got access to the lender sites, lender phone numbers, lender responses. If people want to contact me directly, I'm happy to direct them where to go.
Perfect. So when you defer your mortgage, you do end up paying that extra interest.
The interest accrues on the mortgage. It does not go away.
Yeah.
And the interesting thing is you've seen a lot of people who own rental properties, and renters are now starting to ask, well, if we're getting our mortgage deferred, can we defer our rent?
Yeah.
There's no way to capitalize the rental payment.
That's right.
For
Yeah.
that landlord. Their payments don't go away. And not all lenders are going to defer the mortgage payments for rental properties, although a number of them will. It is case by case considering. It doesn't mean it's a holiday from their utilities, although they can apply for that, or condo fees or maintenance fees or what have you. But I think this is a crisis that's unprecedented. And if people have to realize there's no manual, there's no guidebook on how to approach this.
Absolutely.
There's going to be mistakes made, but a few things the government's done to instill some confidence in us and our housing market is rapidly increase the liquidity of funds being made available for both insured mortgages and for the deferral of mortgage payments. And that's led to a lot of confidence in the real estate market. And that's kept prices where they are. That's kept it from collapsing, which is really what you don't want. This is an unprecedented crisis. We're in uncharted waters. This is far deeper than the financial crisis of 2008. It's far deeper than any crisis in my lifetime that we've experienced in Canada. And I think on the whole, the government's done a fairly good job in making programs available to people to seek rapid relief for unemployment benefits, for small business, for employees. And really the great unknown is how far does this go and how long will it last? That's really why it's really important to talk to your professional now.
The way I look at it, and correct me if I'm wrong on this too, is that if you're really stressed out about your mortgage, you go and look at getting a deferral and seeing how long you can get it for. Because at the end of the day, once there's a return to some sort of normal, maybe you're a temporary layoff, you get back to work, you could always put back into your mortgage at that point where you're not deferred and you take care of that interest.
Exactly. And I think ideally the key is not to get frustrated with the process right now. But there's also going to be a number of other professionals who have been impacted by this. And we're going to see land titles dealing with things differently. It might be slower for registration of titles. Lawyers who have to sign in person to do a real estate transaction. I've seen some of them putting up glass barriers in their office, still meeting clients face to face. The beauty of the mortgage professional is we can do everything electronically. I can do Zoom meetings, DocuSign for our lenders. Really, I can have people take pictures of their documents and send them to me if I need them. Being set up remotely, I'm set up to do mortgages, and I do mortgages right across the country. I've done mortgages in every province in Canada except Quebec. in which case I defer to somebody who speaks both official languages and is familiar with the local nuances. But our industry hasn't changed that much. We've already been in the process of streamlining to do things remotely or do them with a Zoom meeting. Appraisals are now changing as well. We're seeing lots of appraisers being able to perhaps do drive-by appraisals or have clients take pictures themselves of the interior of the homes if that's needed.
I'm going to sneak into a much more expensive or a much cheaper home, depending on how.
Well, lenders do have a lot of tools at their disposal. They can look at previous pictures of the home online. I think the concern now is for people's health and the security of things, but lenders are still, they've got a lot of automated valuation tools that they use, and they use them on every deal. They look at the property tax assessments. They look at what's happening out there now. So if people are looking to refinance, it actually, rates are low. It might not be a bad time to add that line of credit as some extra security for themselves. Might not be a bad time to take advantage of lower interest rates or perceived lower interest rates. Although if you want to discuss that a bit more, Ryan, I can get into what's happened in the mortgage market in the last.
I do, absolutely, because we've talked about the deferrals. We talked about the existing mortgages and the stress of that and what we're going through there. But let's talk about like mortgage applications. So whether it's a first-time home buyer or perhaps somebody that's doing a move up, or I mean, even for that sake, even an investor, somebody who wants to pick up a rental property because the interest rates are so low. There's a lot of ways to take advantage of this market.
Absolutely. And I'm seeing rates still at or near 40-year lows out there. Recently, the Bank of Canada, and I'll go into where the mortgage market's gone in the last 2 weeks. That'll give people an approximation because they hear the Bank of Canada made 2 emergency rate cuts of 50 basis points each. That was really to add liquidity and confidence to the markets. And that affected the prime lending rate. So prime lending rate has come down tremendously. Most big banks today, the prime is 2.45. And if you're sitting at mortgages on the variable side, which were potentially prime -1 not so long ago, you're going to be laughing for the next year and a half to 2 years. I don't see prime really changing at all. But what's happened in the last 2 weeks, fixed rates, which are generally follow the 5-year Government of Canada bond yields, the bond yield dropped tremendously by over 1% since December. It's gone really off a cliff. It's down at just over 0.5% rate of return for 5-year Government of Canada bond. That's the bond yield that's right now. Usually that indicates fixed rates should be somewhere in the neighborhood of 2%. But we're seeing them actually closer to 2.5% to 3% and closer to 3% on average now. They've gone up about 50 basis points in the last week. And why is that on the fixed rate side?
I've had people ask that because it's interesting. You hear the rates are going down, and then they're seeing the opposite with their banks or with their lenders.
So fixed rates have risen 50 basis points, and variable discounts have shrunk by 75 to 85 basis points. So what used to be prime -1 is generally prime now for the variable rate mortgage. And there's a couple of reasons. The first is fear. So fear of credit defaults, and investors who in mortgages are securitized. So the investors who invest in mortgages have asked the banks to pay more. The banks in turn have asked the consumers to pay more. So it's a risk premium that is being passed on now, driven by fear of credit defaults. Consumers are also going to see banks more choosy in who they lend to. Now, the reason rates haven't skyrocketed right now is we have far greater liquidity in the marketplace than we did in 2008. And the government did a tremendous amount of investing with a substantial increase in mortgage-backed securities for the mortgage market for the banks to borrow off of and to lend to than they ever have or in recent memory. So there's a lot of money going to be freed up for mortgages out there. Alberta I see as tightening credit going forward. Really, our market will be one where lenders may have a concern lending to the extent or loan to values that they did before. That's mostly to do with the price of oil.
Well, okay. Yeah, because that's something else. It's like we're hearing a lot about the virus, a lot about COVID-19, but we're not hearing a whole lot about the oil and the market that way.
Well, the price of oil today is $3.86 a barrel for West Canadian select oil. A year ago, it was $54.
Yeah.
That's where our government drives its revenue from. That's where a lot of our jobs are created from. It won't stay that way forever. A lot of factors have it there. In fact, I'd say that all-time low is very short-lived. It'll start to pick up slowly, but the world's going to be in an oil glut for some time. This crisis could be a lot worse. Our government pumped a lot of money into it. That'll keep prices stable. It'll keep liquidity out there. It'll keep people lending and moving. So to answer your earlier question about the person looking to buy a rental property or looking to buy for their primary residence, lenders are treating every mortgage application on a case-by-case basis. So they'll look at the whole picture of your job stability, current job. Even if you're laid off, there's some lenders who have let me know that they realize this will be short-term. They will proceed with the mortgage. Others will proceed with the mortgage if you've already been in a transaction and agreed upon it, as long as everybody's waived conditions and the lender's approved income, they're still going to approve the transaction. But that's going to go forward on a case-by-case basis, because one of the underlying concerns, well, if you've been laid off, will there be unemployment? Will you have your job back? So they'll look at career stability. They'll look at longevity with the company. They'll look at years in the industry. And if you're self-employed, they'll look at your prospects for work and employment. So there's no manual on how to do this, but the lenders are doing their best. And I've seen some very encouraging signs with lenders telling me, Mike, submit it. We'll carefully consider it. Maybe that person works for an airline. They've been temporarily laid off, but they know they're going to be rehired. If that person's got the means to go forward, we'll look at them. We'll look at every individual. The one looking at buying the rental opportunity now may be a terrific time to buy some rental properties for that individual, that investor. I say, let's get you pre-qualified today and see what we can do, because I'm going to have a lot more time on my hands with less volume through sales to guide customers to the lenders. The lenders are going to be there looking at purchase opportunities, which they treat as priority. Number one with the lenders is priority is purchases. Number 2 and 3 are switch transfers and refinances. So your buyers right now are going to find outstanding service at your lenders. Generally, the turnaround time should be very quick.
You brought something up that's really, really interesting to me. When we have situations like this, and they'll come up, and whether it's something as big as Corona, or maybe it's, a little blip in the market or whatnot, or even a blip in your situation. Maybe you realize that your credit wasn't as good as what it was or what you thought it may be, and maybe there's a little bit of time that you need before you can purchase. I think it's really important to take that time and strategize, right? Rather than waiting until the 11th hour and being like, okay, now we can go buy a home. Now I'm back at work, back into the flow of things, and everything seems to be a little more stable, and I've gotten the approval from the bank. Rather than doing that, and even if you're not privy to going out and wanting to view a home, because that's a real thing too, where you might not be wanting to walk through 10 or 12 different homes where you don't know the people that are living there. That's a very real factor, and I think that's something that should be addressed as well. There's going to be a lot of buyers out there that are sitting in a pool just waiting until this kind of blows over. But I think in that time, it's very important for those buyers to strategize and maybe have their finger on the pulse, or work with a good realtor and a good mortgage broker like yourself that has their finger on the pulse of what prices are doing, what product is coming up, what the rates are doing. Because even if you're pre-approved, you can capitalize on a better rate if that comes. You're
absolutely right. And the key is strategy. you really want to plan for your mortgage. And an interesting stat, and this comes from the banks themselves and has been proven over time, 65% of Canadians will break a 5-year mortgage before its term is due. So you have to ask yourself, do you really understand what those prepayment penalties are when you get into a mortgage? And 65% of people, I can tell you, majority of those people said, I'll never break that mortgage in that 5-year period.
Oh, yeah.
No, not me. I will never. Well, ask anybody who's ever paid a payout penalty. They found out it's not just straight 3 months interest with a lot of banks. And the difference is the mortgage broker will guide you to the lenders where that strategy will say, okay, these lenders are closer to 3 months interest no matter when you break that mortgage. Or these big banks, you might pay 2, 3, 4, 5% of the mortgage balance outstanding in a payout penalty. One strategy I like to look at is, why wouldn't you look at variable? Even today, say the average rate is prime, 2.45%. You're going to be in that mortgage for the next 1.5 to 2 years. If you want to switch it out to another lender, you can do that on 3 months interest at any time. You can break that mortgage at any time on 3 months interest. You can lock it into most lenders to a 5-year fixed at any time. It offers tremendous flexibility. Even if the variable discounts have been eliminated, where I see prime for the next 1.5 is extremely low with very low risk. So for a Canadian thinking they might move in the next 2 years or so, I see that as a very low risk option to lock in a tremendous deal, better than the 1, 2, 3, 4, or 5 year fixed rates. Why not look at a variable which gives you all the flexibility in that mortgage? And it's not for everybody. The first question I ask if people are looking at a variable rate mortgage, how do you sleep at night? And I don't mean on your side or your back or your front. I mean, are you comfortable knowing that the rates can change? Well, there's a number of lenders who will hold the payments the same for the whole 5-year term of a variable, regardless of how the rate changes. Another strategy I'd like to have clients look at today, and even anytime, is, do you have a secured HELOC as part of your mortgage? Or is that an option for you? Or do you have a mortgage that opens up a line of credit as you pay down the mortgage? In today's time, say a client has a tremendous amount of equity in their home and is concerned perhaps of future income streams or what have you, maybe they add that line of credit in now. Maybe they have a mortgage that can actually take the monthly obligation of a mortgage payment and throw it completely on the line of credit so they don't have to make payments, so they can do their own deferral program. And I have those mortgage options available. That's the great thing about choice out there right now. Mortgages are for different stages in life for people. You'll have people wanting to pay as little as possible at some point in life. Even a number of seniors have found their property taxes go up and expenses go up and say, you know what, my house is paid off, but I'm finding the cost of day-to-day living going up every month, but I have no income. What can you do for me? And in that situation, a reverse mortgage might be ideal, where, say, they can get a stream of income of $1,000 or $2,000 or $3,000 a month from their home without ever having to make a payment, or get a lump sum, or use it for whatever purpose they want. But for a certain clientele, that might be an ideal mortgage. For the young couples starting out, they might say, you know, we're planning on having a family. They want to see how they qualify if they're down to one income. And we're going to look at products that give them maximum flexibility should they go down to one income, the ability to repay. Or if I know that this home is a stepping stone and a starter home for the next 1, 2, or 3 years, I'm not going to lock them into a mortgage or recommend they lock into a mortgage that could potentially have a big payout penalty. We're going to look at a mortgage that they can easily get out of, or the term might reflect how long they want to be in that home. So really, it's about strategy from the start. And when I qualify somebody, the most important question is, what do you feel comfortable paying a month? Not how much home can I buy? The right question is, don't get out of your comfort zone on the payment. And we can work backwards from there to get the client the property. Because all kinds of bad things happen if I start qualifying people for more home than they're comfortable with the payments. And life goes sideways for some people. If they're not comfortable with the payment, things can go downhill fast. So really the most important purchase of your life, you want a strategy from the start. You want choice of lenders, choice of products. You don't want just one product, one lender offered to you. You want to see the variety of what's out there and understand why you're going with what you're going with.
Yes, absolutely. Just as you're talking there, it made me think, in a time like this too, there's the products such as Mortgage Plus Improvements. You might be able to find, and whether it's a garage that you're putting on or developing a basement and you're having some contractors come in and do that, there may be some contractors that are looking for work in times like these, depending on the comfortability of having people come through your home that you just purchased to develop a basement or to throw on a detached garage. It could be a very good time. There could be some very good prices out there. Maybe expand a little bit on how Mortgage Plus Improvements would work.
Well, the Purchase Plus Improvement is an awesome product for the client looking to do the renovation or addition to a brand new home that they buy, and it's done through the insurers. So what they'll do is, say you're buying a home for $300,000 and you want to put that detached garage on the home for another $20,000, and maybe a basement improvement for another $20,000 of renovation. So maybe now you're up to $340,000. They will show the total purchase price as well, less the down payment percentage, be it 5%. They will throw that additional $40,000 onto the mortgage. So what happens is, I'm going to get the client approved for the purchase on the original price. They're going to get the quotes before their financing period is waived on all the improvements. So you're likely going to want your contractors lined up in a fairly quick order to get you as detailed a quotes as you can possibly get, provide estimates, a scope of the work to be done. If you have drawings, great. And then we're going to resubmit those to the insurer, and the insurer will come back with a commitment to fund the mortgage. And what they're going to ask the lawyer to do is hold back a portion of that advance to cover the improvements. So once the improvements are complete, they're going to release those funds to the homeowner or be directed to the person who's done the renovations to be paid out. That's through the insured program, Purchase Plus Improvements, and different lenders will have different limits on what they can do to it. I recently completed one where there's $80,000 in improvements. Others, depending on the scope of it, it might be a full construction loan in which you're seeing progress advances as work is done, depending if it's almost a complete tear down and reconstruction of a home.
Wow.
And those are substantial budgets, so there's a lot more work involved. But the Purchase Plus Improvement program is an ideal program to go through a mortgage broker on, because they'll be more familiar with it than most branch people will.
Right on. No, that's awesome. So a lot of information there. I'm gonna defer for a second back to you. So Mike, a question I always ask all my guests, being that we're in Calgary and we don't have a whole lot of people that are originally from Calgary. Are you originally from Calgary?
I'm originally from Toronto. I grew up in Thornhill, Ontario, went to Western University in London, Ontario, to the Ivy Business School, used to run a transportation company, moved out to Calgary at a very young age, took a big promotion with the transportation company back to Ontario in 2003. And 2 years into that, back in Ontario, I realized I didn't like the industry I was in anymore. Got into mortgage brokering because I saw them laugh a lot more, have a lot of fun doing what they're doing,
nice.
Help people, number one, and they got paid for it. And that's why I got into what I do. I found a career where I can help people, I can make a difference, and I get paid for it.
That's something I do like about what I see from the mortgage broker industry is that compared to the banks, a bank will have its own specific products that they offer. And a mortgage is not just a mortgage, I'm doing air quotes, but you're able to go and, like your name says, a mortgage architect, and kind of build a mortgage for somebody with something that's going to best suit their lifestyle. Oh,
yeah. And Ryan, the heartwarming stories I could tell you where we've taken somebody in a distressed situation and made a big difference in their lives, be it the client I've refinanced and eliminated $2,000 a month in debt payments for them. The client going through a stressful divorce or separation who never thought they'd be able to stay in their home or buy a new home. The client who's behind on their taxes, who didn't know that there was an option to pay out CRA from their mortgage or by refinancing. The client who has bad credit, helping them get back on life, because there's mechanisms for people going through proposal and bankruptcy to get a fresh start and help make a difference. I deal with A lenders, major banks, a number of the big banks, and a number of monolines who just deal with the brokers. Then I'll deal with alternative lenders who deal through with the brokers who may have an A lending side as well. And then I'll deal with fully private lenders. So really there's all kinds of avenues I have available to me with over 50 lenders we deal with to help people in all kinds of unique situations. And despair is a terrible emotion to have, as well as depression. And when people are in that situation and you can help turn their lives around, there's nothing more rewarding for me than to do that, to do what I do. Really intrinsically, this is a passion for me. I love mortgage brokering.
You love mortgage brokering, and I know a few other loves in your life. One of them being the Stampeders.
The Stampeders, absolutely.
Now I have to ask, why as a Toronto boy, I mean, not that I'm complaining, it's like, hey, we do have the best team, but why as a Toronto boy, why did you adopt the Stampeders?
I think everything started when I moved to Calgary in 87. It actually started with the Flames. And I saw the hockey team at that time in the rivalry with Edmonton. And Calgary wins the Stanley Cup in 89. And it was hard not to start cheering for the local sporting environment. And then I found myself being drawn to the Stampeders games through a number of people I was connecting with. And then I found out about tailgating.
Yes.
Tailgating has become my real passion, where I can sit with family, friends for 3 hours before a game, barbecue, have some beverages, get to socialize personally with people, as well as halftime for half an hour or an hour, and an hour after the game. But I love the Stampeders. I love the sense of community in Calgary. You don't find that in a lot of other cities where they really rally around that team. And you don't find the social atmosphere at any other sporting event, in my mind, other than the CFL. And I just love it. And the fact that we've had a winning team, the winningest team in the league for the last 10 years, is just an added bonus, but it makes it so sweet, so special. I go to every game, every home game. I have 14 season tickets. I've been to almost every Grey Cup in the last 10 years. I travel around with a group. There's nothing more Canadian than the CFL and the Grey Cup experience. People come as strangers. They leave as friends to the Grey Cup. They all dress up, wearing their colors. We paint our faces. And it's just a real spirit of camaraderie. And I think it's a really nice fit with business to just be able to say, hey, this is my thing. This is what I love to do. This is one of my great passions. The game, the product is entertaining. I think it's second to none. The fans are terrific. The league is ultra competitive. And everybody in Canada has an opinion on what team they're cheering for and why your team sucks.
Nice. So I guess that also answers another question, but I'll still ask it. What's your favorite part about Calgary?
I think the spirit of Calgary, the can-do attitude. We've seen a lot of crises over time. We saw the flood in 2013. We've seen the oil crisis. I think the charitable aspect of the city is spectacular, the philanthropy here, but the can-do attitude of Calgarians, and the attitude is they want to get things done. They want less people involved in their lives than almost any other city. The entrepreneurial spirit here flourishes. People want to be able to create, to build, to have fun, but they also want to be able to play. And I love the proximity to the mountains here. I am a skier. I am a golfer. I'm a hiker. This year I've taken up snowshoeing. my wife, my dog, my kids, myself, we love getting out into the outdoors. And I've traveled a lot throughout the world. I think we're in one of the most beautiful cities on earth and one of the most beautiful provinces to live in. And I think more Albertans need to get out and explore it and appreciate what great scenery we have in our backyard.
Yes, yeah, absolutely. And again, touching on a few points that you made there, I think because of who we are and because we have such an entrepreneurial spirit and that we are a lot of independent business, I think it's going to be very important as we come out of this to really support your independent business, support your restaurants and your pubs and your local music. I think it's going to be very important to get out there and do that, come together as a community, which I'm already seeing. I'm seeing people out there on social media saying, is there anything anybody needs? I'm fine. Okay. If you need me to drop something off on your doorstep, I really see the community coming together. And that's something that I've always loved about this city.
Oh, I love the spirit in this city. And that's really the thing I want to emphasize to people. They can give me a call, my cell at any time, be it they a customer of myself or anyone else's, 403-836-7100, or Mike at themortgagearchitect.ca or www.themortgagearchitect.ca. Just give me a call if you've got a question, be it about a mortgage, be it about finances, be it whatever. But I really do see people coming together, neighbors coming together. I had a neighbor dropped a bottle of Bailey's off at our house on Sunday just to help us cope with the COVID crisis and just be a good neighbor. And that to me embodies the spirit of Calgary.
Yeah.
It is people want to not just know each other, but they want to help each other out. They want to contribute. And I saw it when we had the floods in High River, people going down and helping people. You just got to love the can-do attitude of Calgary. And I'm here to help in any way as well, Brian.
Right on. So yeah, again, like whether it's mortgage deferral on an existing mortgage that you have, or just some questions that you have about getting started into the process about being a first-time home buyer, or if you're looking at doing a move up or even a downsize, it's a really good idea to talk to your mortgage broker and renewals as well.
People don't realize there's no cost to switch out a mortgage on their renewal. And why would you not look at the option to have 50 lenders vying for your mortgage through a mortgage broker? You've got that option. We'll give you choice. And the mortgage today might not be the best mortgage for you for the next 5 years or next 2 years or next year. And that's put you into a great mortgage. And I'm happy to look at it, whether you want to stay with that lender or whether you want to move with that lender. I'll give you my own advice. Hey, you've got a great deal, stay with it. No, let's look at this. Well, the first question is, what's your strategy? And that comes back to where we started.
Yeah.
What do you want to do? And that's design that mortgage for you.
And again, touching on that, there's just, it goes so deep, right, with all the mortgage and financing, but just so they have more information here, is that when you have your mortgage and you're in your 5-year term, yes, if you're going to break that, you have a potential of a payout penalty. And with the payout penalty, it actually might be still advantageous for you to make a switch, even if there is a payout penalty. Is that correct?
It is correct. I've got one client locking in to a new 5-year mortgage where their renewal was not till a year from now. And we saw an opportunity to take advantage of a lower rate today that would guarantee the rate for the next 5 years. Then we might be uncertain as to where that rate will be a year from now. So there are times when it definitely makes sense to break a mortgage and switch it over early to renew. There's times when people shouldn't fear a payout penalty because there's some lenders who will port that mortgage. The interesting thing is the qualifying rate has changed how ports work for mortgages, because if you've got a certain amortization on the remaining mortgage, you might have to qualify at that same amortization in order to port the mortgage and not pay the payout penalty. And with the new qualification rules of the stress test, people don't always qualify for the mortgage they already hold. So the important thing is to get qualified in advance and ask the question and find out, hey, what do I qualify for? And the great thing is I can do that generally in about a minute. Just by answering a few questions, in 60 seconds, I can give them the number. To do a full qualification, I'm going to ask them for their documents up front. But to do a rate hold pre-approval, really it takes about a minute to answer the basic questions and probably 10 minutes to go through the complete application.
Well, that's perfect. And then you're set, and then at least you have a starting point of where you're at. And if you are going to be whatever this takes, a month and a half to 6 months, whatever it takes to kind of come through this, or even if you do decide to buy in the meantime, you're well prepared and you're well armed.
Well, most rate holds are good for up to 120 days. So that's one of the advantages of getting pre-approved. And the other is they actually know when they sit with me, because I'm going to ask them for their documents, do a real pre-approval as though it's an approval up front. So there's no surprises at the time they make the offer. I'm going to give them the real goods right away, what they're good to go on. And so when you're showing them the homes, Ryan, they're going to know with confidence they can make that offer. And all offers are going to be subject to financing, because lenders are not just approving the client, they're approving the property. And because the math works, they're going to look at the total picture of the client. In fact, now more than ever.
And by being a little further out, there are probably things that you might be able to work on in that time that's going to get you a better interest rate.
Oh, sure. Most people don't realize that every $400 a month payment in debt they have reduces their buying power by about $100,000.
Oh.
So when they think about that new F-350 they bought that's $900 a month in payment, think about it. That's the size of a mortgage. Do you really expect the lender to lend you out when you just qualified for the truck? Now you're asking for a $2,000 mortgage payment on top of it. That's a lot of money. But some of those credit card payments, people don't realize, they look at like your minimum payment would be 3% of the outstanding balance. So if you've got a $10,000 credit card there, the lender's looking at that like it's a $300 a month payment, even though in your statement you're paying $130.
Yeah.
So that $300 a month payment, we can reduce that, use some of that, what you thought you might put towards down payment, reduce the credit card balance, and increase your buying power before you buy or take possession of the home. And oftentimes we can condition it so that those are paid down or reduced or paid to zero before possession of the home, such that you don't have to do it today. You might have 120 days to do that.
Okay, yeah, that's perfect as well. I think that's pretty much all the questions I have. Is there anything that you can think of that you would want to convey to people that might be either looking to buy or looking to refinance or that currently have their mortgage?
I just say if you've got any question whatsoever, I'm returning every call every day, 403-836-7100. Mike Havery, the mortgage architect. And listen, I'll take the time. We'll talk strategy. And I'm very patient and no pressure at all. So I will deal with you one-on-one and work with you on your strategy and give you terrific advice, even if it's to stay with the lender. Even if I don't do your mortgage, I am going to give you the best advice possible.
Right on. And I really do hope that we do have a football season. It's not, I don't know, it might be a tough one.
Yeah, Ryan, my main hope is for all the people out there who have anxiety, stress, worry, that they get back to being employed, that our economy comes back to where it was, and that they stay healthy and their families stay healthy. And my hat's off to all those heroes who are in healthcare right now, who are providing the first responder services, to those who are working the grocery stores, to those who are working
the delivery trucks. Yeah. All those are frontline. Yeah.
Who are serving us. Anybody who's helping people now in this time. So like you mentioned, the businesses who are doing deliveries for others. I think what we're seeing out of this is a lot of people willing to help out and offer. And hey, anything I can do to help people is terrific.
Yes, and likewise. So until next time, Mike, stay epic. Thanks for listening to Epic Phelan. If you like what you hear, be sure to subscribe and give me a 5-star rating on Apple Podcasts. Follow me on Facebook, Instagram, and Twitter at RealRyanPhelan, and visit my website at therealestateguy.com.